He's off. Yeah.
Yes guys, welcome back to another YouTube video on the channel. This video is the first video in Miami, and honestly I am loving it here in Miami. We're going to get straight into a PowerPoint, just showing you guys a few slides and answering a few questions which you guys dropped in the comments on the past YouTube video as requested, and then we're going to get straight into a trade breakdown. As of recording this video now, it's a trade breakdown from last week on Monday, on the 3rd of June. So we're going to get straight into this PowerPoint. So quickly going over risk management, I've created an example for a 150k top step account example, and I've also written down a few notes which you must know when trading day in and day out. So first of all, a very important rule which you must follow religiously in order to be profitable in the long term is that you do not want to take more than 1 to 2 trades per day. Maximum 1 trade if you take your first trade as a win. If the first trade is a loss, then you can 100%, then you can take a look at the PM session or the next macro using half position size than what you would usually use. And that's only if you was to take the second trade. The first trade would be a loss. The second trade, you would look for an A+ setup in the next macro with half position size. If you take the first trade and it's a win, even if it's a dub of only, you got first DP, that was all you got. You close out 60%, you're out for 25 handles. A small dub, a big dub, you're out for the day, you're done, you come back the next day and see whether there's any more clean setups for you to take in the next day, the next trading day. You do not trade that rest of the day. It doesn't matter if you only made $600 or maybe you only made like even less than that. I don't know. It doesn't matter how much you made, but after your first DP, you'd be done for the day. Understanding the mental side of trading can be very difficult, especially if you're new to trading. Everyone goes through it and everyone is going to struggle with it. However, the simple answer to how to overcome the mental side of trading is time. It really does take time and experience in the markets, and it's not gonna be something which all comes to you within a 6-month period. It takes years for the mental side, for you to become emotionally detached from the dollar amount and also yourself from when you take a win and a loss. There are 3 main things: patience, discipline, and you do not want to be revenge trading. Revenge trading is something which does not coexist inside of my body anymore. It's gone. It doesn't exist at all, and it doesn't bother me at all. You take a loss, no worries, it's part of the game, because there's one thing that's guaranteed in the future is that you are going to take another loss and you are going to have another winning trade. Of course, that's just the probabilities of your future in trading, because say you have a 70% win rate or a 78% win rate, you're going to lose 22% of the time or you're going to lose 30% of the time. And as long as you have good risk management and you stick to your trading rules, think about the long term after 1 month, 3 months, 6 months, 1 year. Imagine how much different your life would be if you just stick to the plan. Instead of jumping into the next trade outside of macro when it's not a good trade, you blew your account. You lost all the progress you built on that account just because of 5 minutes stupid trade which you decided to jump into. I know, I'm speaking from experience. We've all done it. I'm not saying I haven't, but I'm telling you how to overcome it so you don't make the same mistake in the future. You take that 1 trade, you're done, you close your laptop. If that's what you have to do, walk off. So the 150k top step example, you have a 4.5k drawdown, you got a 9k profit target, which is around a 1 to 2. It's not too bad. You have to, for top step it's a 1 to 2. It's not too bad, but FTMO they offer 1-to-1s. What I mean by that, on FTMO you have to make 10k or lose 10k, which makes it easier for the trader to pass the challenge. So when you have a 1 to 2, it means that top step have the challenge more in their favor rather than the FTMO. But either way, you should be able to pass 150k top step account relatively quick and with ease if you have good risk management. I can personally pass 150k top step within around 2 weeks of good price action. I believe you're allowed to trade up to around 15 NQ contracts, which makes it perfect because you're not going to be trading full NQ contracts of 15. But I'll tell you what you will going to be doing. You're going to be trading 1.5 contracts, which is 15 micros, which is perfect for TP taking and taking profits along the way in your trade. First TP, you close out 8 micros. Then the second TP, you'd close anywhere from like 4 to 5 micros. And then on final TP, you close out the remaining of your position. So here I've done a little example. So you're trading with 15 micros, you have a 25 handle risk, which usually we only risk around like 16 handles trading NQ. But say for an example, a 25 handle risk, you got $750 risk per trade, and you're aiming for a 1 to 3. So you'll be aiming for at least 75 handles for your final TP. First TP, You leave at 25 handles, then you close 50 to 60% of your position. You move your stops to the previous swing high or low, just above break even. Second TP is at a minor buy side or sell side liquidity, which is at around 50 handles on NQ. And final TP will be at the opposing liquidity as a major buy side or sell side liquidity, around 100 handles, therefore aiming for around 2.2k per account on Top Step. And you can have up to 350k accounts with Top Step, and then you can get your 200k accounts of FTMO converted into a 400k account, which I highly recommend you do if you want to scale the amount of funding you currently have. Right, so now we've gone over this slide, let's jump straight into the next one. So highly requested macro times. Which macro times do we trade? Which ones are the most high probability? We personally trade the macro which we trade the most is the 9:50 a.m. 10:10 a.m. macro. It's the most high probability and high volatility macro out of all of them. It's always going to be like this, and it always has the best price action in general. It's a 20-minute window after the New York Open, which we look for our entries on the lower time frame around the 1 to 5 minute. I'll show you an example of the trade inside of the 9:50 10:10 after this slide. And then there's a next macro at 10:50 a.m. 11:10, and that's the second AM macro. So say the first AM macro at 9:50 10:10 has poor price action. Then you're going to wait for the 10:50 11:10 macro, which is of course another 20-minute window, the last 10 minutes and the first 10 minutes of the hour. And if that contains poor price action throughout the whole of the AM session, which can happen on a Monday with no high impact news, then you would take a look at the New York PM session, which runs from 2 p.m. to 3 p.m. New York local time. And then also another question which was requested: how do you approach macro times when you have high impact news, such as, let's just say you have PMI at 10 a.m. What are we going to do? We're not going to take a clean setup. If there's a clean setup at 9:55 a.m. and there's high impact news at 10, of course we're not going to take the setup. We wait until the news at 10 a.m. we wait for the news to pass, and then we move forward and we see what price is offering after the high impact news. PMI at 10 a.m. a high impact news or a news similar at 10 a.m. always works like a dime. It works perfectly because the news usually is the manipulation move to sweep a relatively equal high or a local buy side or sell side liquidity, and then after the news you would see the distribution phase where the real move happens after the news, which usually happens like 1 or 2 minutes after the 10 a.m. news. And then you can look for an entry in the last 10 minutes of that macro. If you do not get an entry inside of that macro, yeah, I swear, even if it's 2 minutes after the macro is finished, it's not valid. It's not valid anymore. You're not inside of the macro, it's done. There you go. Wait to the next macro. Don't rush it. Have patience. And it's as simple as that. And you will be a profitable ICT trader. And that's that. That's enough rambling for this PowerPoint. So let's get into the trade breakdown we took on Monday. Okay, so getting straight into this breakdown, this is on Monday, the 3rd of June in the New York AM session. This is an example where we have news at 10 a.m. So exact same as what I've just gotten over in the slide. And we're going to start off straight away by labeling the previous buy side and sell side liquidity on the higher time frame. I'm currently on the 30-minute time frame. I usually use the 15-minute to 1 hour time frame to mark out the previous swing highs and lows on the higher time frame before we drop down to the 1 to 5 minute whilst we're inside of the macro. Okay, so now I've marked out the key buy side and sell side liquidity on the 30-minute time frame. We're going to drop down into the lower time frame and wait for the news at 10 a.m. We're going to see and monitor price prior to the news at 10 a.m. to see which buy side or sell side liquidity it is drawing to. Then we can determine a bias, whether we're looking for longs or shorts. But as of now, as currently we've dropped down to the lower time frame, we're approaching the New York Open. You can see that price looks like it wants to draw to buy side liquidity at 7:30. So let's just monitor price and see what happens. Okay, so shortly after the open, price had come up and it swept this buy side liquidity only once. So obviously prior to the 10 a.m. news, I would look for price to sweep it again and sweep other minor buy side liquidity on the lower time frame, such as previous swing highs on the 1 minute time frame. That's when we look for our entry and the manipulation phase after 10 a.m. So let's just skip forward towards 10 a.m. Okay, so we're above buy side liquidity and you can see that price created a previous swing high on the lower time frame. We're going to mark this out as a possible unicorn setup. What I mean by that is when price sweeps buy side liquidity for the first time, like this, it's a proper sweep of buy side liquidity. Prices then come up and it swept the previous sweep. So the first sweep of buy side liquidity on the lower time frame is come out and taken out that previous swing high once again. And then we'd look for a displacement below the previous swing low, which it creates before the sweep. So this is our displacement level, and we look for a price to displace. When a displacement happens, what I mean by this is when it almost looks, as ICT explains himself, when an elephant was to jump in a swimming pool, you can see the water displaces out of the pool. So all the water will splash out of the pool. That's what displacement is in price action in simple terms. You look for a displacement with a lot of energy going in one direction. So let's fast forward price and see what happens towards 10 a.m. news. So that's what I mean by displacement. On the 1 minute time frame, we have now displaced lower prior to the 10 a.m. news. So it'll be interesting to see how the news reacts. And that's what I was monitoring inside of the live stream. So prior to the news, I was speaking with the members inside of the live stream that I was favoring this upper 1 minute bearish fair value gap. Why not the lower one? Because the risk to reward on the lower one is not valid, and you'd have to be risking over 50 handles on that trade. We was looking for a tap on this 1 minute bearish, and we was running around a 23 handle stop, and we was targeting these lows down here for around a 92 handle gain. But no, as soon as the news comes out, we are not going to just enter short, because of course it can blow through all of these gaps at 10 a.m. news. So what we did, I told the live stream, I told everyone inside of the group that we was going to wait 1 minute after the 10 a.m. news to settle and see how it respects these 1 minute bearish gaps. 1 minute after the news has settled and it's no longer unpredictable price action, then we caught an entry, and as I'll show you now, off a tap on that upper 1 minute bearish fair value gap. Okay, so now the news has come out. You can see that price has come up and just tapped this order block, which is the previous sweep of this swing high. This is an order block here, and it tapped it so algorithmically, it was absolutely perfect to the tick. We didn't enter off the order block, no, because I wanted to see how price reacted at 10 a.m. So now we waited for the candle 1 minute after the 10 a.m. news to see if we got a tap on this 1 minute bearish gap. And there you have it. So as soon as it was around 45 seconds to around a minute after the news, and I could see that price had settled, it came up into this upper 1 minute bearish gap, and it just about tapped it, and we went short as soon as it tapped it and ran a 22 handle stop and targeted these lows. Our first TP was at 25 handles, which we closed out 50 to 60% of our position. It actually ran so fast that we only managed to close out for first TP at around 33 handles. So we closed out 50 to 60% of our position at this level here due to the fact price literally ran so fast. And then our second TP, which we ran around 60 handles, close to this previous swing low, and we ran our final TP just above sell side liquidity. Why just above? So just in case price comes down and creates equal lows and it doesn't fill us, so we always run it just a few handles above the opposing liquidity. So now the first TP was hit, we moved our stops to break even on this trade, and let's see whether we get taken out of break even or we get second TP or not. And there you go. So we just got second TP, and we was floating up around 65 handles on this trade. At second TP, we ended up closing out a further 20 to 30% of our position. So at this point, we're currently around 70 to 80% closed out of our position. We're leaving our stops at break even in this instance, and we're running 20 to 30% of our total position size left in this trade, waiting for final TP or to get taken out of break even. And there you have it, a lovely Monday session trade. We secured 91 handles on that trade, all TPs smashed, and it's as easy as that. I'm not saying every single day is always like this, because usually the price action, well, the price action at the moment has not been the best. This is summer months, and it's what you can expect, to be honest. In the winter months, you can expect this to happen at least 3 to 4 times a week, and you catch lovely setups inside of the winter months. But in the summer months, you take what you get, and clean setups, they come, they go, here and there. But of course, every single week we're closing out in a profit, and we're currently closing out for our 19th week in a row. It was the 18th last week, And now we're on a new week now, and we're about to close out for this week, our 19th week in a row in profit. Tell me someone else is doing that. I would like to know. I don't know anyone. And if you guys have any questions or thoughts, drop them in the comment section below. I'd love to hear them. I do reply to 91% of the comments inside of the YouTube videos, and I love to hear what you guys got to say, and I always take it on board and I drop it in the next video for you guys. Please drop a like on this video and subscribe. Our channel has hit 3,000 subscribers, which is absolutely insane. It doesn't sound a lot to you guys, but we only started 3 months ago and we're growing very, very fast. The Instagram's almost at 40k as well, so I'm very much appreciated for all of the support you guys are giving me. And on that note, we're going to end the video here. Thanks for watching, take care, and I'll see you in the next one.
I just did my 39, gotta change my sheets. Shit be rubbing on my body, sucking till my knees get weak.